Well,
And
then
I
they
think,
can't print it if they're not.
yeah,
Then if they're going to back it by any percentage of gold, any fixed percentage of gold or silver, then they can't print it. I mean, look, whether
what,
they admit it or not, all dollars are backed by gold, whether they want to admit it or not.
mhm,
They will either back it at a fixed rate and be honest about it, or they won't back it and it'll be backed by the market. That's what the exchange rate between gold and silver and dollars is right now. If the dollar system, the fiat system, survives another round of this, which I don't think it will, then yeah, I guess the nominal number we would reach is somewhere around 20 trillion. If you're going to follow it's not rocket science, right? You follow an exponential growth path. That's how every inflationary system starts and ends, right?
mhm,
It's an exponential growth curve. So that's what the balance sheet would have to do. The question is, once we reach 20 trillion, the question is, what is the gold or silver value of that balance sheet,
mhm,
right? What are is it still going to be, is the dollar and gold or silver still going to be exchangeable? Are they going to have a rate, right? So if the Fed goes to 20 trillion, and but then the value of the bonds in their balance sheet goes to zero, and the only thing left is the gold left in Fort Knox, assuming it's even there, then these numbers are meaningless. Like, at some point, it doesn't matter what the number is, because the number doesn't mean anything, which is the universe you enter into when you hit hyperinflation. And
mhm.
because
Yeah,
we're in such a digital world, we're not in Weimar where a government has to actually print up the physical paper and then hand it out to people manually, like put it in their hands, right? We're in a digital world where everything can be done in a split second. The
mhm,
inflation of prices and the money supply can happen instantly, right?
right.
So yeah, we might reach 20 trillion, but by then it might be over. You're going to be measuring goods, you're going to be measuring actual goods that people need in gold and silver ounces. Even in Venezuela, though, right? If you're going to take the perspective of a different country that has a hyperinflationary situation locally in their local currency, they can always go to the dollar if they need to, because the dollar still works.
Yeah,
The real interesting case is when the dollar itself hyperinflates. You can't have any other country going to any other currency because every other currency is based on it. So
mhm.
then then what then you have to go back to actual gold and silver. And that happened in silver once. That happened, I think, in July 2020, right before the big top in around August 2020. So we could see a huge jump in platinum if contracts don't roll over tonight, which we're already seeing. I think it's up like $50-$60 tonight.
Mhm.
I haven't checked the numbers, but yeah, it could be, there could be a squeeze. Usually these things all roll over, but one day they won't. One day they will not. We saw it in nickel. We're going to see it in platinum. Then we're going to see it in silver. And finally, we're going to see it in gold. And that should be the collapse of the dollar. What I've noticed since 2000, 2001, when the current gold and silver bull markets began, yeah, and there have been intermittent bear markets in between, from 2011 to 2015, for example, or from August 2020 to it looks like 2022, around September 2022. There have been little bear markets in between, but we've been in a secular bull of precious metals since then. And what I've noticed is that every time that there's a major bottom in gold and silver, which don't bottom at the exact same time, but they bottom close together. The bottoms in gold and silver always happen before consumable commodities. So
Mhm.
let's say the CRB index, and the CRB bottomed way before that, and it was early September. The commodities bottomed, the CRB index bottom. So now, assuming these bottoms hold, we have a bottom in the CRB before we have a bottom in gold. And so not only the buffer is not only close, it's negative, right?
Yeah.
So this is not just it's not just, oh, this is an interesting chart pattern and what could we make of it. There's a possible logical explanation for this coming from the Austrian school angle of seeing how economics works, right? So when you have the beginning of an inflationary cycle, by inflation I mean the inflation of the money supply. I'm not talking about consumer prices or anything. I'm talking about the actual inflation of the money supply. So when the inflationary process starts, it starts way deep inside the monetary system. That's very far away from consumer prices, very far away from consumer goods. So the inflation doesn't infect the consumer sector very quickly. It always lags. The new money that's printed, it takes time for it to go from the banking system all the way down the structure of production into the consumer sector. So initially, when the inflationary process starts, it's going to take some time. So there's going to be a lag between gold and silver bottoming, which is the monetary commodities, which should be the first to be affected by a monetary inflation. And then eventually the money will filter through to the consumer sector, and then the consumer sector will the consumer sector will bottom and then reverse. That's symbolized, I say, the consumer commodities. Now, as the inflation progresses, as the cycle progresses, you have to get closer and closer. You have to dump the money closer and closer to the consumer sector, because the banks are running out of space on their balance sheets, and they have so much reserve. So we saw in 2008 there were bailouts, right? There were $700 billion bailouts in the TARP or whatever, and there were $16 trillion bailouts in the central banks. So it was still deep in the monetary system, but it was getting closer and closer to the consumer sector. And then in 2020, you have the inflation that's almost directly into the consumer sector itself, because you're paying people checks from the government to go buy their groceries and pay their gas bills and pay their rent, right? So the bottom between gold, when the money infects the gold sector, and then from the time it takes to filter into the consumer sector, is very, very short. And now we're seeing a bottom in consumer commodities before we're seeing a bottom in gold, which means it's affecting the consumer sector a lot faster than it ever has. So I think from an Austrian school perspective, this means that we're very close to it means the next round of inflation, when the Fed turns around and says, oh, we can't do this anymore because all the bubbles are collapsing. They're not going to use those words, but that's basically what they're going to say. We have to save the banking system, whatever they're going to say. It's going to affect the consumer sector very fast, and at that point you have a switch when the public wakes up and says, okay, we got to get rid of this. And we all know what happens then. We've been discussing it for months, for years. I do not challenge the assertion that CBDC would be a horror show for all of humanity, right? It would be an absolute horror movie, right? For reasons that I'm sure the audience here understands. Everything trackable. The government knows everything that you buy, and restricts you from buying things that it doesn't want you to buy, and times a suicide circuit on the currency or whatever they do. It's a horror show. However, it's impossible. It can't replace the dollar and reset the system, because if you think about how they would institute it, if you have, let's say, $10,000 in your bank account, right? And then they say, okay, we're going to move to CBDC now. What are they going to do? They're going to replace 1-to-1 or 2-to-1 or 5-to-1 or whatever the ratio is. Doesn't matter. They're going to replace it equally for everyone on some ratio. And instead of dollars, you're going to have CBDC, which is basically, from a monetary perspective, it's the same thing as logging into your account on the internet, logging into your bank account and seeing a number on your bank account. It's it's data. It's ones and zeros that you're looking at. There's no difference between that and an Excel spreadsheet that you call CBDC, except CBDC is more trackable, but it's based on the price system that existed before it. So it's the same inflationary path that has to be taken by the one before it. It's not a new thing.
I'm getting a lot of calls, from my neighbors and from people who don't exactly poo-poo what I say, but they're like, oh yeah, Rafi, you're right about the endgame. I understand, but it's going to be like 10, 20 years, stop, chicken littling and saying it's coming in a few months or a year or two. And now they're calling me and saying, Rafi, do you think it's okay to hold Apple? Do I hold too much Apple stock? I'm like, I wouldn't hold any Apple stock. I'm not going to tell you what to do, but now you're calling me and you're saying you're a little bit nervous. Yeah, I'd be nervous if I were holding too much tech stocks. So I'm noticing these people that kind of blow me off. They're getting a little bit scared. And I'm getting word from my family, in the States that inflation is getting very difficult for them. And I'm starting to feel a little bit of the panic from people, especially if they're not earning enough income. So I don't know how much longer we have, but if you have extra cash, now is the time to accumulate more. I wouldn't wait, and I wouldn't wait for a pullback, is what I'm saying. It shouldn't be, gold and silver should not be traded; they should be accumulated slowly. So continue doing that, and be serious about it. It's not a game.